All right. Hey there, everybody. I hope you guys are having a good day so far. All right. Should be good to go. In today's session, basically, I want to go over my chart setup. Hey, Lorna, good to see you. And talk about all the different settings and indicators I like to use in order to trade the market. So let me go ahead and start with that. First of all, for those of you who don't know, I basically use the Thinkorswim platform. So Thinkorswim, of course, is a trading platform that also has really great charting abilities. It's a lot of the simpler indicators that you can purchase in our store are available for the Thinkorswim platform. Over the years, this has probably been the most consistent platform that I've used throughout my trading journey. And so it's certainly my go to try and get through everything I want to. Um, with that being said, let's go over a brief view of the chart itself. We'll talk about all the indicators and work ourselves from there. So this is SPX up on the chart. And you can see I have quite a few different indicators that I like to use. So let's go ahead and we'll talk about each one and why I like to use them, as well as what the internal settings look like. That way, if you want to try and match your charts to mine, you are certainly able to do so. So, that being said, here is a chart of SPX, right? So we have the top chart here, and then we have our bottom indicators down here. So let's start with the top chart. So on the top chart, you can see a few different indicators I like to use. Some of these are pretty common. There are quite a few free indicators I use, as well as some proprietary indicators that I had Eric code for me that you can find at Simpler Trading. So let me also pop up my studies here. We'll go to edit studies, and that way we can go through the list and talk about why I like to use them as well as the internal settings. So the first things that you'll see listed here under the studies that I like to use are the Bollinger Bands. And you can see I have two different Bollinger Band studies added to my chart. The first one is the second deviation Bollinger Band. So you can see for the internal settings themselves, I do the length of 20, and then I do a -2 and a +2. That is for the lower and upper Bollinger Band. And the one thing I will point out is I don't track the midline. So, for example, if I were to show the plot, that would be clicked, but I don't. And there's a reason why for that, and we'll go over it. All I'm looking for are for the upper and lower Bollinger Bands here. And those are represented by these inside blue lines on my chart. Now, the reason why I have the second deviation Bollinger Band up is one, usually when you add the setting that's the default setting is the second deviation Bollinger Band. And the reason why it is because as you can see, the underlying price mainly trades within that range, right? That is where it is naturally within its comfort zone. And so when you see the price start to exceed the second deviation Bollinger Band, sometimes, it can trade outside of it for a little while, but most of the time it doesn't like to trade outside of that range. So when you start to do so, there's a good probability that the price will either consolidate or pull back to get back within the second deviation Bollinger Band. So here's a great example of it. Here we start to leave and move outside that inside blue line. And then you can see the next couple of days we consolidated. It allowed the Bollinger Bands to catch up with the price, and it brought the price back within the quote unquote comfort zone. Right? So that's the first thing to mention about the Bollinger Bands. The next thing and reason why I like to use them is because they can help identify when a move and a trend move is getting going, or if it's still managing to trade that way. And what I mean by that is here, for example, right, the price started to go into consolidation. We bounced to test the upper, but notice how the Bollinger Bands didn't. right? Now, if the Bollinger were anticipating that move higher side, usually they're open, like we saw here, because like I said, they like to keep the underlying price within the second deviation Bollinger Band. But here, whenever the underlying price went up and put pressure on that upper Bollinger Band, the Bollinger Bands didn't stall, right? They remained completely flat. And so when that happens, that's usually a clue for us that the Bollinger Bands, at least at that moment, are not anticipating a break higher. And therefore, if we were let's say playing this long to the upside, it would be a clue to take profits. Or if we're more of an aggressive trader, it could be a clue to say, hey, let's short here and play it back down into price support levels. Same thing happened on the lower Bollinger Bands. Notice how the price reversed. We went right back down into the lower Bollinger Bands, but the same thing happened. The Bollinger Bands did not budge when that underlying price put pressure on the lower second deviation Bollinger Band. So once again, that's a clue that if you were short, you consider locking up your profits. And if you wanted to go long, that could be a potential place to buy in and play for the move higher. Here, you can see the Bollinger Bands got pressure put on it by the underlying price, and instead of remaining flat, they started to flare open. So that's a good sign that now the Bollinger Bands are anticipating that trend move higher, and we can look to play it to the upside. Then we started to pull back some. Notice the Bollinger Band started to flatten out. So that's a good clue that, this is kind of the top of the trend move. And if you haven't already taken profits, you might consider doing so. So that's the reason why I like the second deviation Bollinger Band and why I track it. But as you can see, I also track another set of Bollinger Bands, and this is the third deviation Bollinger Band. And you can tell the difference there because instead of a -2 +2, it's a -3 +3, right? So still the same length, still not showing that midline, right? I'm still not plotting that, but it's the third deviation Bollinger Band, and that, of course, is reflected by this outside blue line. So you can see that it runs parallel basically with the second deviation Bollinger Band, but it is further out. Now you might be asking yourself, well, Allison, you already tracked the second deviation Bollinger Band. Why would you track the third? And it's for a very simple reason, and I don't see a good signal of it here. So let me see if I can go back to maybe SMCI would be a good example of this. But basically, on the third deviation Bollinger Band, the reason why I track it is because when the underlying price gets a strong move that breaks that third deviation Bollinger Band, right? As I mentioned, usually the underlying price likes to trade within the second deviation Bollinger Band. That's the comfort zone. But when it breaks the third deviation Bollinger Band, it can actually be a clue that the underlying price is either going to stay within that bar's range that broke the third deviation Bollinger Band, or it's going to keep moving in the direction of the break. And so we do have an example here on SMCI. Here, for example, we start to break the third deviation Bollinger Band, right? And notice how the bar kind of stayed in that range, moved higher, and then the Bollinger Bands caught up with the price to continue that trend move. The same thing can happen on the lower Bollinger Band. This isn't actually the best example of it. Um, but that's the idea. So I can't think of something that's done it recently myself. Um, let me think. MBDA maybe has done it recently. But that's the idea. So when you get a really strong move, it's not uncommon that it happens off of earnings announcement and the move exceeds that third deviation Bollinger Band. There's a good probability that the price will either stay within that bar's range or continue that sentiment either up or down. And so usually when people kind of see a bigger move like that, they'll be concerned, right? They'll either cut the profits or, if they're short, cut the losses. And they won't necessarily keep a runner going, but it's actually a good place to consider doing just that, keeping a runner on. So here was MVDA, for example. You can see it had a strong bounce to the upside. The price broke the third deviation Bollinger Band. And then what happened? Well, the next bar stayed within that range, right? Didn't get a strong pullback like you might anticipate. trading outside the second deviation Bollinger Band. It hung out in that range. And then the next day, we actually broke higher, right? And made another third deviation Bollinger Band snap. Now, that next bar, you had the weight of the bearish divergent bar. We'll talk about that in a second. That drove the price back down. But that's exactly what I mean here as well. Third deviation move. The next day, we actually continued higher. And then once again made another third deviation Bollinger Band snap. Then what happened? Well, the price stayed within this bar's range until finally the Bollinger Bands catch up with the price and the price gets back inside that second deviation Bollinger Band. So that's the reason why I track the third deviation Bollinger Band is specifically for those stronger moves that break not only the second, but that third one, because when that happens, that usually means there's some strength behind the move to where it will either stay elevated within that range, either to the upside or downside, or it will actually keep going for the next few bars in that direction. So let's go back to our study list here as SPX loads up. So after that, you can see the next study that I have up is the ATR trailing stop. So let's go to the internals of this setting. So the ATR trailing stop, I personally track as a dotted line. That way I'm not confusing it with my moving averages. I'm not confusing it with the Bollinger Bands. And so you can see it's this dotted line on the top chart. And I have the colors set as red and blue. So you can see there are red dots here, there are blue dots there. And then for the internal settings, it's based off the Wilders for the average type. And the ATR period is 5. The ATR factor is 3.5. Now, once again, the ATR trailing stop is an indicator you can find on most charting platforms. It is free on the Thinkorswim platform. And I believe this is also in regards of the internal settings here, not, the visual look of it, but the internal settings, I believe, are all the default. The visual I did change. And the reason why I like to track the ATR trailing stop is one, it can help identify a good support and resistance level. So here, for example, we went up, tested the ATR trailing stop as resistance. It held. We dropped back down, and then we got a break above the level. Right here, we came down, tested as support. It held, bounced up, and then got the break below it. And then on a longer time frame, especially like a weekly chart, it can also create a good trend move, right? With the idea that the trend is changing from bullish to bearish or bearish to bullish. And usually on the weekly chart, it's whenever it switches from as resistance and turns into support, that can create a really good bullish trend signal to jump in longer term. So I'll show this on SPX on the weekly chart here in a second as soon as it pops up. So here, for example, right, we were trading with the ATR trailing stop acting as resistance with the red dotted line. The price went up and tested it, held it, pulled back, but then it started to break. And once it starts to break, that can potentially be a bigger trend signal to the upside. And so what happened? Well, we broke above it and we trended higher from a range of around 3260 up to the all-time highs of 47.70, right? Excellent trend move to happen. And you can see there are a few times that SPX came back down and tested that ATR trailing stop. It held as support. And so it made a good buy-in entry to continue to play that trend. Here, the ATR trailing stop switched, right? We went from it holding support and then we broke it to where that blue dotted line turns into a red dotted line to act as resistance. Well, what happened? Well, we started to trend lower, right? It wasn't until recently this year, back in June, right? Late May, early June, that we started to break the ATR trailing stop back into support. And so now we've gotten back into a bit more of a bullish trend signal. So currently we're pulling back in the market. But if that level can hold support, very much like it did back here, that could create an excellent buy in spot for us to take it back into a bullish trend move to the long side. So, big fan of that indicator. I like it for those two different reasons, right? Support and resistance levels, as well as when they switch for a potential trend move, either up or down. Let's pull back up our studies again. So the next study that I like to use, you can see are 3 different simple moving averages. Um, and they are the simple moving averages. I base them off the close price, and I track the 10-period simple moving average, which is that yellow line, and it is the short dashed line for the 10-period simple. So the smallest dashed line out there is my 10. The 30-period simple moving average is also that gold color, and it is a longer dashed line. Once again, the price is based off the close, the length is 30, and that's the 30-period simple moving average is that longer dashed line. And then the solid line, that solid gold line on my chart, is the 100-period simple, right? Just a standard solid line. And so you can see all my moving averages match in regards to the color. All of them are based off the close, and they're just different lengths that I track. And there are a few different reasons why I do that. One, when the moving averages get to be stacked up, and what I mean by that is when the shortest interval, which is the 10 period simple, is above the 30, and then the 30 is above the 100, that can be a bullish trend signal. Vice versa, when the 10 is below the 30 and both are below the 100, that can be a bearish trend signal. And then when the 10, either when the moving averages are converged or the 10 is in between the 130, that can be a more consolidating signal. So the moving averages can once again help identify the trend itself. And it can also act as great support and resistance levels to play for pullback entries, right? To buy in at. So you can see when we're in this bullish trend on the weekly chart back here, every time it came down and tested and held the 10 period simple, it made for an excellent place to buy back in for this trend move. We had one dip where it started to break below it, but then it went down into the 30 and the ATR trailing stop. It held that as support. So once again, made a good buying opportunity to try and play for a bounce higher. Vice versa, when we get to be in a more bearish trend and the price goes up to retest the moving averages and fails to break above them, it can create a good opportunity and place to short from. So, a few different reasons why I like to trade with the moving averages. We also have, of course, on the top chart here, the multi squeeze indicator. So you can see I have multiple time frames set up. I have one set up on the 10-minute chart, right? I have one set up on the 30-minute chart, the hourly, the daily, the weekly, and the monthly. And those boxes are represented up here in the corner. Now, the multi squeeze indicator is a premium indicator over at Simpler Trading. So it is one that you would need to purchase from us. But the reason why I like this indicator is because if I'm looking at multiple time frames, right? Let's just work our way back to a 30-minute chart here. The lower the time frame you go, the more of those boxes you can see. Like I said, I have mine set up for the 30, the hourly, daily, weekly, and monthly. So now that I'm on a 30-minute chart, you'll see the 30, hourly, daily, weekly, and monthly boxes up here. And the idea is when they print green, there's no squeeze, right? There's no squeeze on any of those time frames setting up. But when they print red, it means that there is a valid squeeze that is setting up. And so when you get squeezes across multiple time frames, it can make for a really good signal that you might get a higher probability move, right? A greater than anticipated move with a lot of energy built up into it, either to the upside or to the downside. So currently, we're on the 30-minute chart for SPX. You can see here the 30-minute, 60-minute daily and weekly multi squeezes here. And for all of those, they're green right now. So that means that there's no squeeze printing across those time frames. And of course, you can confirm that down here on the lower indicator. But because there's no squeezes, that means I'm not anticipating an energetic kind of move. If we had multiple squeezes setting up across these time frames, the boxes would be red. And in turn, that might mean that I want to jump into a trade idea based on what the other technicals are telling me for what direction, right, the squeeze might fire. So very much a fan of that. It helps eliminate, having to go through each of those time frames by themselves. I can just pull up a smaller time frame, take a quick glance at that, and it lets me know whether or not I have multiple squeezes setting up or if I don't have anything setting up, like in this case. So that is the multi-squeeze indicator. After the multi-squeeze indicator, you can also see there's a little spacer label that's not really anything other than it just breaks apart where the multi-squeeze indicator is versus the multi-crossover tool. The multi-crossover tool is also a proprietary indicator at Simpler Trading. And this one basically helps identify, based off the EMAs, if they're stacked up or stacked down or if they're crossing each other. So you have bearish signals where the 5 EMA is below the 21. You have a bearish cross signal, meaning the 5 is just starting to cross below the 21, and then vice versa. When it's green, a dark green like this, that means the 5 is above the 21. It's more in a bullish sentiment, right? That stacked up formation, kind of like what we talked about in the moving averages. And then when it's a lighter green like this, it means the 5 is starting to cross above the 21. So it's a similar situation where I've set this up for multiple time frames from the 10-minute chart all the way up to the monthly chart. And the idea is it gives me a quick glance and understanding of how are these time frames looking? Are they a bit more in a bullish structure, a bearish structure, or are they just crossing between one or the other, which, either means that we're setting up to go into a bullish structure or might mean we're in a bit of chop. So currently on the daily chart for SPX, for example, you can see on the 521 daily, the 5 is below the 21. So it's a bit bearish on this time frame. That's where you get the dark red. Whereas the weekly and monthly are still very much bullish, right? So what does that tell me? Well, it tells me that one, we're getting a pullback on the daily chart, but the weekly, monthly structures are still strong bullish structures. So if the pullback on the daily chart finds a support and holds and we bounce, that could create a buy-in opportunity to play the longer time frame still to the upside. Or if we continue to break down and then the weekly, the 5 starts to cross below the 21 and it turns into that bright red color, then it could be a clue that things are, starting to look really weak in the market and we're preparing for a move lower. So similar to the multi squeeze, it's a good way to be able to look at multiple time frames without necessarily having to click through all the time frames and wait for those charts to load up to have an idea of, okay, everything, from an intraday chart up to the monthly charts bullish, or oh, the intraday charts are all starting to turn bearish and it's, almost like a waterfall effect where it's causing the next higher time frame to turn bearish. So I might need to be out on the lookout for a bigger rollover move. And so it just gives you that flexibility of knowing that's happening without pulling up all those time frames to necessarily confirm it. The last two indicators I have on the top chart here is the top hat indicator. And the top hat indicator is not currently showing on SPX. So let me pull back up MBDA because I'm pretty sure it was printing on there. And the top hat indicator is basically an indicator that helps identify potential exhaustion levels. Now, personally, I like to pair this with exhaustion levels on the awesome oscillator for momentum. And we'll talk about that indicator here in a second. But I usually like to pair those two together, but you don't need to, right? So there's the top hat indicator. Let's go inside the internals here. So I have my color set as purple. You can see that the ATR factor is a 2.5. There's a weekly, monthly, and daily level here. None of these internals I have changed. If anything, the only thing I might have changed is the color, but everything else is how Eric has created this indicator. Once again, this is a proprietary indicator of Simpler Trading, but the top hat indicator is basically reflected by these little, carrots, if you will, these little triangles at the top. So it's a clue that, okay, we had a nice move up. We're starting to see exhaustion. So we could either start to stall and chop or get a bit more of a proper pullback. Same thing happened here with the top hat, right? It kind of was at the high of the move. Then we started to consolidate, and currently we're getting a little bit more of a pullback to the downside. So it's a basically a clue that if I was bullish, I might start considering taking profits, or if I wanted to be bullish, I need to be very mindful that I could be close to the top and need to protect capital at that point. And the last indicator up here on my charts is the divergent bar indicator. This is one I actually had Eric create for me. It is another proprietary indicator. Now, the colors are slightly different than what it is that Eric set it as for my chart. So if you ever want to change the colors to match mine or set it up to, be whatever colors you want, you go under the globals section of that indicator, and I is technically a bearish divergent bar, and the divergent low is technically a bullish divergent bar. And for those of you unfamiliar with this indicator basically helps confirm a potential higher high or lower low. So let me actually pull up the weekly chart here for NVDA, just because there was a lot of chop on NVDA earlier, to give you guys what this setup looks like. So, in short, a divergent bar can help give you a clue that you'll get a higher high or lower low than the bar that prints the divergent bar within the next 3 bars. So, here, for example, or bullish divergent bars, right? So the high of that bar was 277.58. The next bar followed through with a higher high of 290. And I usually give it 3 bars to work out. Bullish divergent bars I look for in more bullish trend, and bearish divergent bars I look for in more bearish trend. So here was a bearish divergent bar, for example. The low of the bar was 177.70. The next bar followed through with a lower low of 162.37. So it gives you a high probability of, a quick follow through. On a daily chart, that means you're looking for it to happen within 3 days. On a weekly chart, 3 weeks. An hourly chart, 3 hours. And it can make for some great overnight trades, as well as be maybe the start of a catalyst for a bigger move. Like here, for example, a bearish divergent bar off the 100 was the catalyst for a stronger sell off to the downside. And then to go over the bottom indicators really quickly, the first one is the awesome oscillator, as we can see here. Um, the awesome oscillator is a free indicator on most charting platforms. It helps to track overall momentum, as well as the potential trend and trend change. So when the bars are trading below the zero line, that usually means that there is bearish weight on the underlying price. When the bars cross back above the zero line, that's usually a trend signal to change into a bullish trend. Vice versa, when the bars are above the zero line and cross below it, that can be a trend signal to change into a bearish trend. The internal settings for this indicator are the default. The width is 3. I draw them as bars. They're numerical values. And you can see they're red and green bars down here on the plot. The other way I use momentum bars are when they get to the top or the bottom of the axis. When they're at the very bottom, that's a clue of bearish exhaustion, to where the price could either pull back or stall and consolidate. And vice versa, when you're at the top of the axis, that's a sign of bullish exhaustion, where the price could once again either pull back or start to consolidate. So it's good not only for potential trend moves, but also to show when you might be reaching exhaustion levels as well. The next indicator I have down at the bottom is the compound breakout tool, which is right here. So compound breakout tool is another indicator I had Eric create for me. There's really nothing to do on the internal settings. Arguably, I guess the one thing you could look to do is change the colors on this. And there are the colors. There we go. So there are the colors you could look to change if you wanted to. Um, but overall, basically on the compound breakout tool, this is another indicator to help identify potential trend moves as well as the change in trend. So for example, here, let's just scroll back. Here, we started to get a bullish signal when 2 or all 3 lines are in agreement. In this case, green, right? That can be a bullish trend signal. You can see that took you to the upside. When it gets choppy like this, it looks like Christmas lights, right? The signals are kind of printing back to back. That's a sign of consolidation. And then when you get all of the red in agreement, like here, it can either be a bearish move or in this case, we're in a bullish trend, so it's a valid pullback move, meaning you'll pull back into support. If we broke all our support levels and this remained valid, then it turns into a trend move. Vice versa, if we're in a bit more of a bearish trend, like we were here, for example, and we start to get a bullish signal, that's a clue that we're gonna go up and test resistance. If we really break all our resistance levels and that remains valid, then it turns into a bullish trend signal. And then the last 2 lower indicators I have are the Squeeze Pro. So once again, we talked about this a little bit earlier with the multi-squeeze indicator. The Squeeze Pro, basically, whenever it prints and once again, the only thing I did on the settings was I changed the color on the low squeeze from black to purple, so that way I could see it on the black background of my chart. But a green dot means that there's no squeeze. A yellow dot is a high compression squeeze. A purple dot on my charts is a low compression squeeze, and then a red is a standard squeeze. And so when you get a squeeze that starts to print, right, that means that you're usually it's not uncommon to be in consolidation, you're building up energy, and then when it starts to fire, that means you might get a greater energy move to play for a trend to move either up or down. So I love finding squeeze out there's because it can be a great place to jump in early on the price and be able to play the trend move itself. And a lot of people here at Simpler Trading like to use it. Now, if you have the Thinkorswim platform, there is the standard squeeze. That one you can access on Thinkorswim because they did purchase the Thinkorswim platform actually purchased that indicator from Simpler Trading. But the one I currently use is the Squeeze Pro, and the difference between the 2 is the Squeeze Pro just gives you more signals. It just gives you a little bit more on the signal side, in regards to, showing and identifying setups. Like, sometimes all you get is low compression squeeze to print. So on the standard squeeze, that one wouldn't show up, but on the Squeeze Pro, it does. And then the last indicator I like to use is the true low indicator. The true low indicator can basically help identify a great discount price to buy in at. And a really great example of this is from really on the monthly chart for a lot of symbols because we had such a downturn last year that what happens is is when you get into a bearish trend on the daily chart, you'll get what I call a cluster print of the true low. And so usually if you start to get a cluster print, it tells you, okay, let's take a step back to a longer time frame and look to see if we get a one-off print. So let me go to actually SPX here for an example. But the idea behind the true low is they don't print very often, right? They're not supposed to print on every pullback. You have other indicators that can do that. The idea is it's supposed to really show a good discount price on a symbol. So that way you can look to buy in and you're getting like a bargain deal, right? Like a 95% off deal. And like I said, if it looks like you're getting a cluster print on one time frame, usually taking a step back into a larger time frame, if you get the one-off print there, can usually signal a good place to buy in. I do personally also like to pair the true low indicator with the Bollinger Bands, meaning and you'll see an example of this here, but when the Bollinger Bands are flaring open and the true low is printing, you wait for the Bollinger Bands to flatten out. Once they do, that usually signals the discount buy. So here, for example, on the monthly chart, if you look at the very bottom here, we've only had the true low indicator print twice in the last 20 years. And the last time it printed was a cluster print back here on the monthly chart. Notice how the Bollinger Bands were flaring open. This was during the housing crisis back in 2008. But then once they started to flatten out, that's a good place to buy in at. Now, it wasn't the very bottom of the move, so you did get a signal saying, "Hey, that's a good place to buy." But the benefit of waiting for the Bollinger Bands to flatten out is you're not sitting through any pain to the downside. You're buying in when it's ideally trying to reverse. And obviously, if you bought shares of SPY here or, bought into the market, That obviously was a great discount buy. You also had a one-off print on the monthly chart back in 2010, and that was the last time it printed on a monthly. And just so you guys get that clarity, so you see how this is a cluster print here, if we go to a quarterly chart, you'll see on the quarterly time frame, it was a one-off print. And Ethan, yes, the divergent bar is a proprietary indicator at Simpler Trading. It was one I had Eric create for me. So if it's one that you're interested in, you can certainly go and purchase it. It's also available on other charting platforms. But of course, I use Thinkorswim, and it's definitely on Thinkorswim and available to be used there. So waiting for this quarterly chart to set up here. But here, for example, the quarterly chart, right? Notice how this signal does not print very often, especially on a quarterly time frame. And notice back in 2008, it just gave you a few bars of print, right? So on the monthly chart, you kind of had a cluster print, whereas on the quarterly chart, it only gave you a few one-off bars, and obviously was a great discount buy. Notice the last time you had it prior to 2008 was during the lows of the dot-com bubble. Before that buy-in opportunity, prior to that, the last time you had it print was back here in 70, 74. That was obviously a good place to buy in for both the shorter term trend as well as the bigger picture move. You had it print in 58 for that. You had a one-off print also in 1970. So you guys the idea. It doesn't necessarily print very often, but when it does, it can create a good discount buy. And so those are all the indicators I use, as well as the internal settings for the true low indicator. The only thing that you really need to change on it if you want to are the colors of how the signal itself prints, right? Which you can do that under these signals here if you wanted to change the colors, but everything else, you can keep the same. Eric does a really good job of coding our indicators, so there's not much you have to do to them. So that is my time, guys. Thank you so much. As always, may the trade be with you, and I look forward to talking to you next time. Bye, guys.